Hey, it's Mike with PriceActionTradingSystem.com, and it is Thursday. It is December 10th. This will be our chart lesson for today, and this is going to wrap up our week. No chart lessons on Fridays. Um, I'm probably going to trade one or two. I'll probably trade through Tuesday, maybe Wednesday of next week, and then I'm probably going to take the rest of the year off and get a little bit of vacation. With the pandemic and all, I haven't been anywhere this year. I haven't really taken any vacation other than a couple of days here and there, the long weekends. And so I'm pretty much I need a break. So I'm probably going to take the rest of the year off. We'll just kind of have to see how next week plays out. But at this point, I'm planning on working Monday and Tuesday, and then Wednesday's still in the air. And that could always change. I may end up working the whole week next week and just maybe taking Friday, starting my, not trading it all on Friday and just starting my vacation on Friday for the end of the year. So it's getting a little. Yesterday we had a pretty good trading day. Today we had a lot of movement, but there's just not many trades. I don't know if it's my chart or what, but there's just not many trades here today. And really, it was on towards 9 o'clock before I had a decent setup. And we had a lot of movement. We're just not getting any setups. Prices will burst in one direction, and they just go into these little congestion areas, and they get stuck in there, and then they burst out. But it's so difficult to trade those. It's so uncertain that they're just not very safe. So you'll see as we go through the trades, I'll point them out. They're hard trades, and unless you get the right setup, they're dangerous to trade, really. So that's the point I'm trying to make, and I'll show them to you. So it's going to probably continue to get tougher as we go on in towards the last day of the year, especially the last week and a half of December. Most all your banks and uh, large trading institutions and your large traders and your professional traders, they'll all probably be taking off for the end of the year. So it's going to get tougher as we get into that. Doesn't mean that you won't have good trading days, just like yesterday was kind of an anomaly that just popped up. It'll still happen. You may miss out on a really great trading day, but at some point you need a break and you need to take off. And a lot of times newer traders are they don't like to take off and they don't want that. But you'd be surprised how sometimes if you just take a break and refresh your mind and come back, how much clearer everything looks and how much easier you can see things. So just something to think about. But let's talk about today. This was a range day. We spiked up into this and we went sideways. It was up here mostly, but once we broke lower, you just want to look for that measure. Just measure this part of the range, drop it down. You can see we went to the tick, and then we ended up getting a little failed break out of that later this afternoon before we traded back into the range again. So this is just a range day. And you can see we're trading. Here's your overnight highs. Here's your overnight lows. And we traded within that all day. That's a trading range. And that's typical. The market just doesn't really have any direction for sure right now. We might see a rally one day and then it sells off and takes it all back the next day and then rallies back some the next. And that's just fairly typical of this time of year. So just be aware of that. It's probably going to get slower as the year goes. But let's back out. We'll go through the trades. It shouldn't take very long. There's a couple of them I wanted to talk about that people posted on the forum and ask about, and I can see how some people could get tripped up on them. They're kind of tough trades, but there's always something It's very rare that you'll get a trade that fails that you can't see any reason why it doesn't. Occasionally, once in a blue moon, probably 99%, 98% of all trades, if they're losers, you can read. If you study it, you'll figure out what you missed and where you went wrong or how you misread it or whatever. But occasionally, once in a blue moon, you'll get those trades where you just can't really figure out what you did wrong. And these trades today are not really those kind of trades. I think I can show you what you probably missed on them if you got tricked on these couple of trades. But they were on the, people had posted them on the forum and were scratching their head. And I think in today's case, there's pretty clear evidence of why they failed. So, but let's talk about the trade. 7 o'clock or actually came up here on this second entry. Unfortunately, there's a great second entry off the key entry point, but look at that signal bar. And really what it is you got one of those little congestion areas right here. And this is why you can't trade these. I mean, if you had a good signal bar here, there's no reason you couldn't go short because you got plenty of room to get out, but you don't get a good signal bar, and you see what happens. It gets stuck in there. And you got to be real careful trading that. And unfortunately, you don't get another signal bar. You actually do get a pretty good signal bar here, but you got to go short. At that point, that's the low of the day, the low of the overnight, and that's always a dangerous place to go short, even off a key entry point, it's particular when we're already a little ways away from the EMA. Now, you could make the argument, hey, we're probably going to make a measured move here, and there's a good chance, and you can see we made basically a perfect measured move. So you might take that like that, and I mean, this blue line wouldn't have been here. You do have a little double bottom there, and it does pull back and test that. And that's another reason to like that one. But it's just a little dangerous. You definitely could argue for it to be green, so maybe I don't know how I grabbed that arrow. So we'll make it green. But I'll just be honest with you, that one will fail sometimes. It's not high probability, so I'm not crazy. But it's never a good idea to go short at the low of the day. So, but it does work on down. Then of course we meet that measured move. We missed it by a couple of ticks, it looks like. Then we bounce, and we're working up here. And you don't really get a break in a new high here, but you get a lower high with a double top right at the EMA. Nice bearish bar. Again, it's kind of congestive. So for that reason, I marked it green. But this was a fairly good downtrend. I mean, you can see we trended down for several hours here. So you're probably going to get a retest attempt. So it's just a matter of getting a good setup. And if you don't take that one, you don't get a shot at it. But again, it's not a perfect setup. It's congestive looking. And it could do just like it did here, break out and fail and come back, just enough to stop you out and then go down where you think it's going to go. So that's the reason it's green. It's just a little aggressive. Then we make the new low. We actually get a higher low right here, but the signal bar is no good. And there's no way to get in that move at all. It just goes without you. And then you get a break of the trend line, which is the first entry short, and then you come back and you get a second entry short here. Look how far away we are from the EMA. It looks a little congested, but at that point, if you move this to the far right side of the chart, yeah, it looks a little congested, but it also looks like a lower high, and we're probably going to make another leg down. And so I really didn't draw this congestion until we got a couple more bars in there. So once when it made this next bar, then you go, oh no. I probably should have paid attention to the congestion, but it drops on down to the EMA where you think it would probably go. And the other thing is here, if you drew your trend line off these lows and you drug the high up here, you've got that midline there as well. And you can see prices kind of chopping around that midline. So, but you may go short right there. Now somebody else took a second entry long right here. They had a totally different setup than me here. They just had one leg down, a little correction, the second, and then it's only a couple of bars though, and they had a nice bullish bar here. I guess it would have been right in here somewhere, and it breaks higher and it turns down on them. I just don't know why their chart looked so much different than mine, but it did. And maybe it was just his chart, but there's no long here because this would be the only signal bar you could use, and then you don't have enough room back to these highs, and you just don't want to risk that. Looks like this probably still would have worked, and notice what happens. It fails, it gets back in the range, and it fails out the other side before it finally, even when it breaks higher here, it fails and comes back before it goes higher. So there's just no entry there. Then we run up here, and you do come back right here to the to this micro trend line and the midline that's working up through here, and you're looking for a measured move, and we don't quite have that yet. I would start by measuring it like that. And you can see where that target is I don't think we ever made it. We got close, but I'd also measure it from here too as a secondary. And I think that's the one we met. I think we met that one to the tick right there. And it took a while to get it, but anyway, that gives you a little. I mean, that tells you that, hey, we probably got more room to go up. Plus, we haven't reached the upper side here yet either. And the main thing I like, this is a first entry and then second entry short that fails. And it is off that key entry point. It is at the midline of this larger channel. And even if it's going to be a little congestion area, you got plenty of room back. That should be right in there. You got plenty of room back to the highs there. So, but again, it's a little aggressive, so I marked it green because you're a little ways away from the EMA. It's never smart to enter that far away from the EMA. We run on up. We get a failed breakout the other side. Of course, you don't get a good setup to come back. You make a lower high here, but you're right back in the range without much room. And then you make a failed breakout the other side, which this does close on the other side. So again, it's a possibility, but there's a second entry long right there. Notice that you coming back first entry and second entry. It's right at the key entry point, but we're back in this channel. And that was what I was talking about at the beginning of the chart lesson, that you got to be careful trading out of this congestion and these little small ranges, because this is what happens to you. It breaks higher and fails, turns down, stops you out, but then it goes right where you thought it was going to go. It's not hard to know where prices are probably going here, but when you're coming out of congestion, it's like trading a range. Prices will break out and fail, and oftentimes in both directions more than once. Like we broke out here and failed and went up, then we broke out here and failed and went short, then we broke out here and failed and went up, and it looked like we were going to fail again before it pushed on higher. And that's the problem, is you don't know. It's too easy to get stopped out before it goes where you probably know it's going to go. And so you got to be very, very careful. But anyway, this was another second entry that was just a quick trap, and it tricked people. And people were arguing over maybe where the trend line is. Maybe I drew the trend line wrong, this and that. This is how I originally drew it. You could argue for it to actually be a little steeper, because sometimes it's usually going to be off the closes, and if it's working down, that puts it right there. And I believe that to be correct in the end. I originally drew it a little flatter. I drew it right off the green one, but it's probably, you could argue for it to be like that, because then that catches this bar too, and that accounts for that bump there. And then you can see the midline actually fits slightly better there. So that's probably where it is. But it doesn't matter. It's not the trend line that caused this second entry to fail right here. It's the congestion. It's the little range that we're in. So I hope that's clear. You just can't go long into all that resistance. And you can see how prices are just working sideways there. You had a little failed breakout to the low side, a bigger failed breakout to the high side, and then another failed breakout to the low side before we went higher. So we're working up, we make this high, and then you come down, you make this low. We basically, this pullback here was coming back to test this breakout area. You can see that. Then we go first entry, second entry. So you got two legs up, and you actually went short on the second entry right here, but it fails, and it acts like it's going to go higher, and it probably traps some people and then gives you this big bearish bar. I like going short there, because that gives you plenty of room to get back down to even the midline, most likely. And so I like that entry as a trap right there when it broke above and failed quickly, because I guarantee there was a bunch of people that probably saying, hey, there's a failed second entry short, and they go long at the high of the day, and this is what happens to you. So I like that one for a nice long trap. And you can see how quickly it kind of it drops real fast, because that's all the people that were long having to jump out real quick. And you can't go short down here out of this congestion, because it's right back into here, and this support here. It fails. This one is tempting to go long, But again, it's not really getting rejected here. We're just kind of hanging around. Odds are we're going back up, at least to here and maybe to the EMA. But it could break higher one tick and come back and work around a bit and maybe even go lower. So it's just not a good setup. You could argue for that to be a second entry. Actually, the second entry triggered here, and that's too neutral. But now by the time that ends, that's congestion. I mean, if you get one more bar sideways, definitely stay out of here. Maybe you could argue for that to be green. I'm not going to mark it, but you might argue for that to be green. And we run up, we get a break. We try to make a new high, and you make a lower high, but you don't want to go short right into the EMA right there. Not a perfect signal bar, still a few ticks there. And it's looking like congestion again. Of course, what we do is we come back down and test this low, and when it acts as support, prices rocket out of there. So here's another one. Again, the second entry is when it breaks above this bar, but because they got matching lows, you might take this trade. But again, it's right into the EMA, and sometimes that'll cause you problems. That's another one you could argue to be green. There's tons of these green ones today, but that's about it. So then we run back up to the high side. We fail. We come back here. Again, look how we're in this congestion. And we end up getting another outside bar with a lot of stem and stuff, and it's just too congested. There's support right across here. I don't have it drawn on there, but it's just right across here like so. And you just don't want to go short right into that. Notice we fail out of that and turn back up, but you don't get a signal bar. Then you fail up here and you make that another one of those little traps. It tries to go lower. So this is really almost very similar to this trade right here. If you notice that, you might trade it as a repeat pattern, but it's still not a great signal bar. It's probably bearish enough, but it's still a little bit congestive, and there's not a lot of room back to here. So probably best to leave it alone and see if you get a lower high, which you do right here. You push on down, you come back, and that really confirms that trend line. It actually breaks higher and turns down. I like going short when it goes out the other side. You could probably wait till here and go short. You're getting down into the lower half of this channel, but there's still a lot of room there. But the middle is where you got to be real careful. But with that failed breakout and this trend line working down and the EMA behind you as well, I like that one. I mean, you're not getting a lot of opportunities today. So if you get one that's, on a really strong trading day, I might mark that one green because it's close. But on a day like today, that's about as good a trade as you get. So then we run down, we get an overshoot. You make a low, that perfect measured move that I told you about, just measure this, and if we start going lower, look for that measured move, and it bounces to the tick. And then you get a double bottom and higher low, and this breaks lower and turns out, just go long right there. You could even probably go long here, but you're starting to press it. I like entering when it goes back out the upper side of this bar. That gives you plenty of room. That turns out to be a really good trade. Then we get a break and two legs up, so that's a second entry short. But also notice how we're going sideways again, and we kind of fail out this side, then we fail out this side. This signal bar was not perfect. It is a second entry, it is a failed breakout, and there's not a ton of room back here, and it's close to the EMA. So I marked it green again, but prices are probably going to come back and test this low at a minimum. And you can see we end up just making another leg down. But notice how we came back inside that range first before it finally made its way lower before then going higher. But we come back down here, we test these lows again, then we rock it back up again, and we turn down right here, and we turn down again. So I draw that trend line there just to see, and it does turn out there's a channel working down here. It doesn't really help you a lot because prices never come back to it, but it's still there. And if you'd have got a good enough signal bar, you might have gone short here, but you don't. Here's that lower high. This looks a little like a repeat pattern. The only problem is, where was the other one? right here. The only problem is you wouldn't have had this channel quite yet coming down. And so it just looks like sideways, and we're going to go lower where here we have it, we got a clear channel with the lower side, and you got to go short right into that where you just bounced off of it. So for that, it still would have worked, but you can't risk that because it may come down and touch that or make an equal low and bounce on you. So just be more patient. It actually comes back right here and makes a true failed second entry short, and I forgot to mark that one. Notice you're coming down first entry, and then you make a second leg down. So that's a second entry long, and it fails right at that key entry point, but it makes a double top too. And everything's close, you know, we're closing below the EMA. So I like that one because it's starting to look sideways again, and this is looking like a little channel, which it is. But we're still making lower highs and lower lows. And that's why I like this lower high right here, because we made a lower low just before it. So even though it looks a little congestive, notice how we're kind of working up and down, and it does, and this does confirm that trend line, and you pretty much got enough room to get out before you reach that low. So for that reason, I like that one too. It's real close to being green, but I think it's good enough. And you might even argue for this to be a double top. And so you could argue that this is a failed second entry long too. But we've moved a good bit here, and this still works out really nice. You still got room back down to this low, but I didn't mark that one. But again, it's another one you could argue for to at least be green. We run on down, and we don't get back down to the lows of this thing at all. The range ends up really taking the precedence here. I'll back out and show you the channel again. I think you were better off just to play the short-term stuff and the sideways channel today, because it ends up winning out here. Notice we got a little resistance when we came back there, but we push right on through, and it just kind of ignores it. So when we drop on down, that was a pretty good move down right there, and then we bounce, and then we go back in another one of these. There's just no setup here that's worthwhile until you get a failure that drops out. And it's so late in the day, it's almost 2 o'clock. And there is a little bit of a double bottom there. It's actually a double bottom with a little failed tick lower. So I like that one because we're going to come back and test that EMA and that at a minimum, most likely. And it could turn back down there, but we're just looking for a scalp on these breakouts. And if you get a good breakout like with a good signal bar, play it like a range. I mean, somebody asked me about a trade from yesterday that was pretty much just like this. And all it was a break out of this is a trading range. You know, you could probably argue, hey, this is congestion, but all congestion is a micro trading range. And prices still act exactly the same. When they break out, they fail, and they come back and test those areas. Even if they're going to go lower on the breakout or higher on the breakout, they'll come back and test those areas. And if it gives you plenty of room, it's a high probability that you're going to get a scalp out of it. And that's all you're really looking for. Now, I understand sometimes they take on off like that, and you get a lot more out of them. But at a minimum, we're looking for a scalp. And there's a high or low here. It's after 2 o'clock, but it's just barely a couple of minutes after. So if you had enough room to get out before this high, you could even take that one. I don't know if there's enough room there or not. I didn't spend any time on it because it was after 2 o'clock. But if there was, I wouldn't be afraid to take that trade, because we're probably coming back to test this high at a minimum. You can see we still kind of moved along there, and we failed out again. When it hit that trend, it breaks out, goes to that trend line, fails, and then it comes back and tests this again before going higher. And that's what prices do out of ranges. But if you come back out, you can see I drew that trend line off those first 2 swings, and that kind of confirmed it. But notice how we came up shorter and shorter here, and then we went the other way. I just believe the range is the play here, and this is just a failed breakout. People probably saw this trend this trend channel, two-tiered channel, and we're probably playing it because we did come off the highs of it. So you would expect prices to try to reach this low, but when they can't get it, notice the buyers got confident and they come back in. And we go all the way back to the top before we start down again. So the range is still in play right now. So anyway, I hope that was helpful. This turned out to be a long chart lesson considering the trades we got there. But it was a lot. It was some good stuff in here that you can explain that probably, hopefully, will help some of you trading this. These kind of ranges are hard to trade. They're easy when your low's right here and every time prices come down there, they bounce. And they give you good signal bars, and every time they come up here, they turn down, they give you good signal bars. It's easy that way. But when you're making, notice how each time we came down, we made a different low. That makes it hard to buy that. And each time we came up, we made a different high here. That makes it much harder to trade. You pretty much have to trade the little trends and the little ranges and congestion and go to your more micro channels because you're not getting a clear, even though this is a range, and this is considered your support area and this is your resistance area, they're not clean. They're not consistent. And when they're real clean and consistent, they're easy to trade. I used to love those kind of days because they were so, they're so predictable that it's ridiculous. This one was not quite as predictable because it's not a clean range, but it's still a range. So I hope that's helpful. But I'm going to wrap it up. This is going to wrap up our week. I hope everybody has a great weekend. I'll see you on Monday. And again, probably a couple of 3 days of next week. We'll just have to see how it goes. But I'm just kind of starting to put the idea in people's heads. So if they're not watching the video every day, if they show up next week and there's no videos, they know why, because I'm on vacation. So anyway, I'm going to wrap it up. We'll be back to do it again Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.